Hey guys. Okay, have we got some sound? Should have some sound. Great, we've got some sound. Okay, we can kick off. Thanks all. Thanks for joining me. That course does sound very good, actually. Okay, so I'll do the usual thing: run through the markets that I cover and try and give you an idea of what I think might be happening. Obviously, if you've got any markets that you want me to look at that I don't cover, I'd be happy to give them a bash as well. I've got a cable up here at the moment, not for any particular reason. I was just looking at it earlier. I was trading it earlier, actually. So. Might as well start with that one. Obviously, we've had quite a good recovery lately. I'm not sure this recovery is going to last, actually. There we go. I've got probably too many trend lines on here, actually. Getting a little bit confusing, so I'm going to take some of these off. I tend to overdo it on the trend lines sometimes. Let me just take some of these off. There we go. Try and get a clearer picture. Okay, so in effect, we've really just gone sideways for at least a month. Maybe a little bit longer. So trend-wise, there's no clear direction going on here. We do. I probably actually should start off with the slightly longer-term charts. See if that gives us any clues better than the daily charts. But monthly at the bottom. That's probably too far off that we need to look at right now. But there's the weekly chart, so you can see very clear bear trend that we've got to remember. And at the moment, this is just a bounce and bear trend. This is actually a really positive candle here. I like the fact that we in the new low and this is the engulfing or whatever you want to call it, engulfing candle. So that does look quite positive. Whether that heralds the start of a bull trend is too early to say. Certainly does indicate that maybe the bear trend is going to at least stabilise for a little while. But the key will be this trend line, of course. I actually should put a longer term fib on here as well. There you go. So we still have some obstacles to overcome, but seeing above 149.70 is helpful. We've still got to tackle the trend line. I would want to see some sort of pattern to back up the idea that we could, well, certainly be stabilising. I think that's quite clear we already are. I'd want to see something else to back up the fact that we might be able to see this pair push higher. There's nothing in the weekly chart to say that. Other than that very nice candle last week. So it's definitely, set some alarm bells ringing. We've got to have our eyes peeled for anything else. What could that be if there were anything else? Well, if we were to drift lower over the next couple of weeks and bottom out again somewhere around this lows of March, then we've got a potential inverse head and shoulders pattern. Other than that, at the moment, we don't really have any other pattern. So it would be a case of just seeing if we can push through certain trend lines. We've got this little cloud holding us back at the moment. It's only doing its job. The 50% fib there at 150.60 doing its job also. We were selling into that yesterday, in fact. So the only thing that is worrying me slightly and is holding me back from saying that we should be really looking to buy into longs at the moment is the fact that, let me just put it on the hourly chart actually. Okay, scrunch it up. Sorry, a bit slow, the system. I think this pattern here, which I'm going to have to squeeze on the screen, but this is to me like a rising wedge type pattern here. See where I drew the trend lines. Sorry, a bit confusing actually with a lot going on here, but I think this rising wedge is of concern, and we have got overbought in the short term. So my fear is that we start breaking down below the 150.00 area. We've been down to 149.57. There is some good support down there at 149.60, which has certainly worked today. So that will be the key. If we can't hold above here, and I've got a feeling we won't, then on the hourly chart, it looks like we can stage a bit of recovery where we have already. But I'm not sure this recovery is going to last too long. Above 150.30 would be a little bit more positive in the short term, and then we could start testing the upper ends of this wedge pattern, which I can tell you is around the 151.00 area. So that would then be quite important. This is a bit too confusing looking at that short-term chart. I haven't got enough info on there. But that's concerning me. That rising wedge pattern isn't the most positive thing either. So I'm not seeing anything other than that nice weekly engulfing candle that's telling me to buy this pair just yet. We'd have to certainly break to the upside of this rising wedge that you see here. That would then allow us to break above the cloud, break above this slightly longer term trend line that I've got in here. So yeah, that would be the first thing we need to get through. We need to at least get through 151.00 for me to start thinking about something more positive in the longer term. But I think the risk is a break below 149.60 at the moment, and then we'll have to see whether we bottom out around the March lows or whether we go to retest the April lows. Either of those levels holding would give us something positive, but note how we're getting a bit overbought as well on the daily chart. So I think this has been, at this stage, all this is a nice bounce in the bear trend, and at best I think the bulls can hope for is some sort of stability over the next couple of weeks. But we'll watch this space and see anything else. We've also got this 100-day moving average tying in with that 61.8% fib up there around the 51.70-80 area, which is going to be quite important if we were to push higher. Euro, always a favourite, so I might as well just go straight into that one. That's a pretty clear pattern there, isn't it? I don't need to tell you that this market's been in a bear trend for a fair amount of time now, and certainly these trend lines make that very clear indeed. This trend line here is really doing its job over the last week, so selling into that trend line certainly works. The 106.85-80 area is holding the downside, so you can see that sooner or later we're going to get a move out of this. We've just been basically edging sideways as we trend below this trend line. I favour a move to the downside. I'm sticking with the bears. I'm not one for going against trends. So I'm actually short this in a small amount at the moment. In fact, going against me a little bit as I speak. But I wouldn't be the slightest bit concerned unless we at least close above the trend line up here around the 107.80-90 area. Preferably a 2-day close, really, because we're seeing in several markets like a 1-day close, false break, and then a move back below trend lines at the moment. So you really do need to, I would say, if you're looking for some sort of longer term signal to buy into the euro, you would want at least a 2-day close above this trend line. And then we've got this area up here around the 108.25-30 area, which has held the rally. So that's also Fibonacci resistance. We would need to clear that. Through there, yeah, I would start to think a bit more positively. We can start entering this cloud then. Probably push up to around the 110.55-60 area. You can see that held at the beginning of April and also around the end of March. So that's a decent fib level to look at. I should probably just have a quick flick at the longer term charts in case they're telling me something that I'm not seeing here. You can just see that trend line there has held really nicely. But to me, this, even on the longer term chart, this just looks like a consolidation pattern. There's been plenty of those throughout this bear move where we've just consolidated, gone sideways and then dumped again. You can see here we can do that for several weeks, consolidate, dump. This is a big consolidation pattern, but I don't see it as anything better than that. I don't see that as anything more positive than that just yet. Hang on a sec, sorry, I'm just going to flick back. Check something. Yeah, you can see here, like this. This was not quite as positive as that candle we saw, that weekly candle we saw on the cable, but still quite a nice big blue candle there. A few people might have thought, hey, this is something that's indicating this is a trend change. We had a slightly lower low, 104.56 below the 104.60 low from the week before. Big recovery. We even managed to beat at some stage at that candle, push halfway through the next candle. So, on a candle formation only, you might be thinking, this looks pretty good. I'm going to be looking for buy signals here. I'm going to be buying into dips, and it just wouldn't have worked. So all that really did was indicate stabilisation over the next few weeks, and I'm wondering if that's all that big blue candle in cable is indicating as well. You really need other factors to back up any sort of trend change, and we're not seeing that at all. Euro, definitely no pattern there that's telling me that this is about to reverse. I don't think this is a double bottom. I think this is purely just a consolidation pattern. So I think the risks are to the downside. In this one, we got really oversold, but really that's quite a pathetic bounce, rally really to unwind an oversold situation. A few days of rally and that's it. We've petered out bang on the first challenge really. So doesn't look very good to me. I would stick to selling into rallies. I'd say a 2-day close above the trend line, I may start to think differently, but I would need more than that to be buying in, to be changing my tactics of buying into any weakness. I'll have a look at the Aussie dollar. We'll look at the 4 currencies I cover are cable, euro, dollar, yen, and Aussie dollar. So those are what I track every day. So might as well just plough through those to start with. Probably worth having a look at gold and oil as well. Stock markets aren't really doing a huge amount at the moment. I'm waiting for some sort of indication of direction on those. So yeah, not a dissimilar picture, is it? Really, with the Aussie dollar to the euro and cable again had a quite a stable run here over the last 3 months. We've just been going sideways, but I'm not seeing anything there that's telling me to look for the beginning of a bull run. Not yet, anyway. Let's see what we've got here on the weekly chart. No, nothing really. Just a nice consolidation pattern. We had one back here which lasted about 2 months. This is going on a bit longer, 3 months. Certainly been slightly more volatile as well, but this first Fibonacci resistance at 78.56 areas really done its job. We've not managed a weekly close above there yet. So let's just have a look at the monthly chart. That's not really telling us anything either. Let's stick a trend line on here. There you go. I guess that, if anything, shows you how far down we could get to. 70, 90 area, 70, 80 area. Well, by the time we get there, it would be all the way up here, somewhere closer to the 7200, 7150 area. But that does give you some idea of what the downside potential is. I wouldn't get too excited about the fact that we're oversold on the monthly chart. We can stay oversold for quite a lot longer, in fact. So this period of stability has at least given the weekly chart an opportunity to unwind that oversold situation. You can see how long we stayed oversold for in the weekly chart. So buying into this pair in the hope of unwinding that would have been a killer. Some of the steepest move of and actually has been this area, and maybe sooner rather than later now we'll be ready to resume that bear trend. I think so. This trend line here doing its job nicely. We haven't actually managed to close above it. A couple of spikes above, but quickly the bears piled in, sold it off. Same thing yesterday. Even though we had a blue candle, got nowhere near it, and today we're backing away from that trend line. So yeah, I think this is all a fairly negative picture to me, really. As I say, a day or two's close above this trend line would be the very minimum that we'd need, and then we'd have to challenge these April highs up here. And then it would be a case of getting through the 100-day moving average and testing March highs. There's a lot of obstacles here, and there's no pattern or any other indication to me telling me that I want to buy this. So certainly tying in with a stronger dollar still. I'm not going to be betting against that yet. I'll finish up with the currencies on the dollar yen, unless anyone's got anything else they'd like me to look at. The dollar yen's pretty boring, so I'm not going to spend a lot of time on it. This is giving us absolutely no clue as to where it's going in over the medium term. Let's just blow this up. If you like trading ranges, this is the pair for you, for sure. Again, I think I've overdone on the trend line, so I'm going to take some of these off. Okay, so we're in this kind of triangle situation going on here. As I say, you can see that we've just basically gone nowhere, certainly this year, direction-wise. Move up, move down, and it's just ranging and ranging. So intraday levels are actually working quite well. It's obvious that this trend line is going to be key to any move on the upside, so we're going to have to break through the 120, sort of 45-50 area if we're going to have any sort of positive indications for this pair. We've got the 100-day moving average down here tying in nicely with this lower trend line around the low 119 area, 119.30, 119.20 area. In between there, we've got this little fib level around the 119.65 level. So if you're just trading these kind of three levels in and out, that could work quite well. And then we just wait for the breakout, really. If you can see something else on there that I've missed, but really this isn't giving me a whole lot of information at the moment, and it really is just a case, I think, trading in and out of the range, in and out of those levels, and then waiting for a breakout. Euro, yen, sure, let's give that a go. Just loading, give it a second. While it's doing that, I'll just tell you, those four currency pairs, I write daily reports on. You're probably aware of that already, but if you weren't and you want to have a look at the website, the reports are updated before the European Open, well before the European Open. I tend to do them in the middle of the night, so and I also do a little video commentary for about a minute or two every morning, just to give you an insight into what I'm thinking. I tend to ramble on that, which hopefully is some help, as well as the levels, the intraday levels that I give you with some trade signals and stuff. Actually, we post a lot of our reports for free on here as well. That page is exactly the same, shows you exactly the same reports that our subscribers get, and I tend to post some free stuff on there quite regularly, so you can get a feel for what we do and how it works. Sorry, this is taking a little while to load, isn't it? What's going on? Doesn't seem to be working. What have I done wrong here? Sorry, wrong code, that's why. Here we go, this should work. I'm going to also give you my Twitter handle. Increased sound, sure. Is it too quiet? Let me see if I can put the volume up. Oh, it's on full volume. Maybe I'll move the mic nearer to my mouth, see if that helps. Oh yeah, there's my Twitter handle. Okay, so we've got the euro yen. Oh, it's been a long time since I looked at that. Let me just get rid of all these lines. They're well out of date. Okay, I'm going to start on the longer term stuff, just to give me a bigger picture. That can come off. Let's start with a monthly chart. See if I'm missing anything. Okay, that's not particularly relevant now. So we've had a really good run. We've now got some interesting moving average stuff going on, either 100 and 200-day moving average. We're certainly testing that month moving average, which looks like it's coming in around the 128.00 level. So that's going to be quite important. We'll see if we can close the month above that, dip below. But I'm not seeing a whole lot else here to give me major clues. Nope, not really. some big longer term trend lines here, but these are not particularly relevant, as you can see. Okay, always worth a look at the monthly chart. Which moving average? 100 and 200 I've got on here. The red one is the 200 month moving average, which is around the 128.00 level. The blue one is the 100 month moving average, which is around the 130.50 area. I tend to just keep an eye on those. Okay, so there's your weekly chart. We could probably make more sense of this. Actually, I'm going to throw some fibs on here. Okay. So we're hovering, trading above and below the 38.2 around the 128.50 level. You can see that so we're just hovering above and below there, really. Doesn't really tell me an awful lot. Okay, no, I'm just going to move on from there now. Okay, let's go shorter term. Okay, daily chart. Start by sticking some fibs on here. Put some trend lines on. Don't like that one. Okay, what have we got? Very much clearly in a bear trend since at least December. Quite a steep one, to be fair. Not seeing anything bottom pattern-wise here, indicating that we're going to do anything particularly positive. This, to me, just looks like a nice little bear trend recovery. A little, yeah. We're approaching the trend. We're approaching this trend line, so obviously that's going to be the key at the moment. Where is this trend line? 129.40 today. That's where it comes in at. So it looks like this is presenting some sort of selling opportunity. We've had a nice little run, but it's not the steepest recovery, is it? And all it's done is really give us a chance to unwind that oversold situation. The pattern's clear. We go down, we have a recovery, we go down, we have a recovery, we go down, we have a recovery. So I don't think there's any reason to change this pattern at the moment. Sell into the recovery, sell up to the trend line. Really, we've got a very clear pattern of lower lows, lower highs. Why would you want to bet against that? There's just no reason, is there? Once we're into overbought territory, which we will be within a day or two, so then we might just see this market turn around, start to head lower. That would be my best guess. I wouldn't be wanting to be long this market, certainly not at the moment. Again, we need to see a day or two's close above that trend line at the very least. We're going to have to beat then the 38.2% fib around the 130.10 area. That will be a struggle. We've got the cloud kind of intercepting there around that level as well. So probably got a little trend line from here as well. Yeah, that would be trend line resistance. So this whole area up around the 130, 120 areas, or 130, 130.10, 130.40, in fact, is quite a nice resistance band, even if we were to push higher. I know that's a fair way off right now. But that would be a realistic target, I guess, if we were to manage a decent push through this trend line, which I would be surprised to see. I wouldn't bet, you never say never, but that looks like quite a challenge. So in the short term, that's what we've got. Obviously, if we manage to push higher over the next couple of weeks, then we could make it up to these early April highs, mid to late March highs, and then there's a lot of Fibonacci resistance up there as well, around the 131.40, 131.60 area. So if we were to get as high as that, I think that would be a tasty selling opportunity. Those are the three big areas you've got to watch at the moment for this one over the next few weeks. I think there's a good chance we won't even make it through the first trend line anyway. In which case we start dipping back below the 128.50 level. That's going to be more negative, and we'll see if where we get to. Probably a retest of these March lows down here at 128.86, 126.86. Who knows? Even a retest of the April lows, and of course a break below there signals that bears are well in control, and the resumption of the bear trend, I would imagine. So yeah, what can I say? Not a positive picture. Those are the levels to look for on the upside. I would favour a move to the downside, really. Is that in detail enough, or did you need something a little bit more specific? Let me know if you want me to go into more detail. I can always go into a shorter term chart if that would help. I've got 15 minutes, so I can have a look at some other currencies, but in the meantime, gold's worth a look. I wrote an article, actually. My pleasure. I wrote an article on gold today. I write one free article every week, post it on the website. It's also written for InterTrader, which they put on their blog. And I've looked at gold today, and it'll be posted on my website a little bit later. Actually, it's not up there yet, so I'll just run through what I've noticed. Bulls have had a right old hard time in gold, and I don't think that's going to change. This is the monthly chart. I've over-fibbed it a bit there, but you get the picture. You've got the 100-month moving average here, the blue line, and it looks like we're starting to settle back below there at the moment. So that's the first negative that I can see at the moment. Weekly charts are a little bit clearer. Whoops. You can see we've had a nice unwinding of this oversold situation on the monthly chart as well. I think the rally earlier this year. Let me just grab that. There you go. I think this is. You can see we're just ranging at the moment. Over the last few months, we have just ranged. We are still in a gently downward sloping channel, but we are therefore still really in a bear trend. What's going on right at the end of this chart here is this triangle pattern here. So it's a question of which way do we break on the triangle pattern. I tend to think that we're going to test the. I think that it's more likely that we will test the lower end of this triangle first, at least. But this is the pattern. This is the pattern that's dominating at the moment. So there's nothing positive about this either. To be fair, maybe this ties in with what looks like the stronger dollar dominating going forward. And certainly this doesn't give me any indication that gold's about to take off. I don't think this is a double bottom. We bottomed here at 1132 here at 1142. I don't think that really counts as a double bottom pattern, so I can't say that's positive. Nothing really I can add to that, I guess. This is gold, and we're looking at gold. This is spot gold. Okay. So, bear in mind that triangle pattern. We'll move on to the daily chart. I haven't actually got that triangle on in here, which I should probably put on. But anyway, you can see that we have got... Yeah, let me stick that trend line up here, actually. There you go. You can see how nicely that trend line is held over the last few days. In fact, over the whole of April. Once we peaked, the rest of April just held below there. You can see how the 100-day moving average has really done its job as well. Once we broke below there, middle of February, we've not managed to certainly get above it on a closing basis. Only this one day, 6th of April, but that in itself wasn't a particularly positive pattern with the blue candle. This spike higher, pullback, red candle, that certainly isn't anything positive at all. And since that quite negative formation, we've certainly hovered below the 100-day moving average, been unable to even almost challenge it over the last 2 to 3 weeks. Since that time, pretty dull. The levels have worked quite well, to be fair, if you've traded in and out of gold. The short-term support and resistance levels haven't worked badly at all, but I was warning yesterday that a break below this trend line here would be a sell signal, and that certainly seemed to be the case. We collapsed quite quickly down to support in the low 1180 area. I've got 1183 as a decent support area. We've tested that so far. You can see we've got that from this trend line here. If you just put some shorter term fibs on your own chart, you'll see that the 1184, 1183 area is not a bad support area.
I think any bounce now is a selling opportunity if we were lucky to get up to this trend line, which I doubt. In the high 1190 area, that would be a nice little sell there. But I'd be surprised if we get that far. I think selling gold into any strength now is probably the safest bet. We've got a little bit oversold in the short term, so who knows? Maybe we'll get that selling opportunity. But we'd have to start pushing well above 12.05 for me to start turning positive again. So yeah, I think this is all looking quite negative, and I think more likely is a break of 1180 than a push above 12.05. Oil, sure. What level would I sell the euro? Sure, hold on one sec. We'll go back to the euro. So the euro is pretty clear cut. Just to recap on what I said, it's all about this trend line. All about this trend line here, which comes in at 107.83 to be precise. So the 107.80-90 area looks like a good selling opportunity, but we've had that selling opportunity already this week and last week with the test of that trend line, and that certainly held. So if we were to get back up there, who knows? Never say never. Then that probably looks like worth giving it a go. A push through there, well, yeah, we'll be into the low 180, 108 area, the 108.25, 30 area. You can see so this is as high as we got was the 108.48 level. So I think this would be the next selling opportunity. Ties in with this cloud resistance here. It's a fib level as well. You can pretty much see why we topped out here last week. Is it last week? Yeah. What with the trend line and the fib and everything else going on here, it's obvious why we did top out. I'm actually surprised we didn't sell off more aggressively. We just seem to be going sideways. Maybe we just needed to unwind that oversold situation just a little bit more before the bears grab control of this. Oh, your levels too. Okay, there you go. That makes me feel better when someone else backs up what I'm saying. Okay, so I probably don't need to talk anymore. You've already got it all sorted in your head. But yeah, I think sooner or later the bears grab control of these and push it lower. Timing, I don't know. That's the one thing I'm no good at. Let's have a look at WTI crude. Okay, appreciate that. That's kind of you. Okay, oil's a tricky one. Oil is a tricky one. Let's show you the weekly chart. This is just the June contract only. I'm not running the continuous contract yet. I'm going to just give it another few days. But this was expected to see the market top out that low $58 area. It did. It's purely because of this fib resistance at 28.3.6. I thought that would be enough to see that peak, and it has done so far. You can see we've pulled back quite nicely from there. We have got overbought on the daily chart, so we are in need of a correction. I don't need to talk any more about that. That's just fairly basic. I do think that we can go a little bit lower on this. The key is definitely 55.80 at the moment. That's this little trend line support there. 55.80, 55.70. We haven't exactly tumbled to it. We've just drifted lower. So clearly the bears aren't really grabbing control of this market. It's just a bull market correction, only a short-term bull market correction. 1, 2, 3, 4, 5, 6 weeks. Nice little. That 6-week move upwards is just a bear market correction, and we have just seen over the last few days this short-term bull market correction. Does that make sense? If we can hold this trend line, and there is a good chance that we will, we've become short-term oversold. There is a good chance we can hold that trend line now. I do think that is worth a purchase, seeing if oil can bounce off this good support here. It also ties in with some short-term Fibonacci support as well. So I think this is a really good support area, worth trying along. If you're trading, these are the opportunities that you sit and wait for. So you've got to give it a go. If it doesn't work and we do break lower, then yes, that is a bit of a sell signal, bearing in mind the longer term negative trend. So you'll have to be quite nimble. You'll have to be ready to stop out and sell into a short position, and we could then quite quickly target the $54 area. Where's this 100-day moving average at? Okay, 54.10. So that ties in with what I'm seeing on shorter term charts with price action, Fibonacci support levels, and the 100-day moving average. So I think that will be the next key level if we fail to hold on to that 55.80, 55.60 area. just be aware of that. Obviously, if we do go lower, by the time we get there over the next few days, this 100-day moving average is also going to be tying in with this trend line here. So there's all sorts of good reasons why this could hold the downside, and that would be the next decent support level. Obviously, if we do hold here and bounce off, which I think there's a good chance of us doing, then we'd be heading back up to the $57 mark, and of course that low $58 area could be a problem again. We peaked last time at 58.80 in the June contract, so that is the level to beat. And then we run into this little trend line up here. So I think those are all the levels that you need to be aware of, really. I can't elaborate too much more on that. I could probably throw a couple of extra trend lines on here. There you go. That one would be more significant than this shorter term one. So again, we need a break above $59. If you were selling up in the low 58 area with a stop above 59, that could well be worth a trade. But yeah, you can't deny the fact that we're in a longer term negative trend, and this is still really just a consolidation of that trend. There is nothing particularly bullish. What was this low? 46.68. Then we've got 45.93. Yeah, I don't think that's any sort of convincing double bottom pattern, really. You could argue it is. You could argue it is, but I'm not convinced. I don't think that's really a factor. I'd have to see a weekly close above 58.50 at least to become more optimistic on this one. But short term, I do think we can bounce. Longer term, I'm not so sure. Short term, yes, I do think we can get back up and perhaps test this area up here. So we'll see what happens. Obviously, a break below 58, sort of 55.50 would be probably where you need to have your stop below 55.50. Give it a sort of 30-40 ticks on that one. Okay, I think we're running out of time. We've got 2 minutes till the end. But if anyone else got another question or another market you'd like me to look at, please let me know. I'll just waffle on a bit about the S&P because that's one of my favourite markets. Is the only reason we haven't looked at stock markets. This is the main stock market that I look at least. If it loads in time for me to make any comments on it. Cheers, Naz. Thank you. Okay, so E-mini S&P, another market that's just been heading sideways. These markets have been fairly dull over the last couple of months, haven't they? Hang on, just trying to open this out a little bit so we can see the more recent action. There we go. Something of a triangle pattern really here. I could probably stick another trend line on there somewhere. Yes, that's the one, isn't it, really? Could probably even take that one off. There you go. So we are in something of a negative channel. Hang on, do I prefer this one? Yeah, I do prefer this one. Forget that. Yeah, we are we're going sideways, aren't we? We're going sideways, and we're going to have to get through the 2110 area to retest the all-time high at 2117.18. Obviously, that's going to be key. The big decider, all-time highs are always important. The low 2080 area is working quite nicely as support. Below there, we've got the low 2060 area, and I don't need to tell you that this is going to be extremely important if we ever dip down below there, because we've got the 100-day moving average, we've got some Fibonacci support, we've got this 2.5-month trend line. It's all happening down here in the low 2060 area. GBP US dollar, I did mention earlier, but I'll run through it again. I don't see anything particularly positive in that, to be fair. I think it's just the first pair that I looked at, so you may have missed it. Yeah, we're struggling with this trend line here. We're struggling with a 50% fib. We're struggling with this cloud. We've become overbought. To me, this just looks like a bounce in the bear trend. I don't feel particularly positive about that. As I said earlier, I'm going to have to at least see a close above this little triangle pattern here. I'm going to have to at least see a close above the 151.00 area for me to turn positive on cable. Until then, I remain quite negative, and I think the risk is actually a break to the downside, a break below the 149.60 area. around 149.50 area would be a sell signal for me on that one. So yeah, we're trading within that 1.5 point, that 1.5 point area is pretty much no man's land, but I don't feel particularly positive. So yeah, it's 151.00 or it's a break below 149.50 really. Other than that, you're just trading within this triangle pattern, I think. But even then, getting a bit overbought in the short term. So who knows? We could break that triangle pattern to the downside sooner rather than later. You can see even on the daily chart we're getting a bit overbought in a bear trend. I think this is a consolidation pattern over the last 2 months. I just don't see anything particularly positive about it as at the moment. Even a break above 5100, okay, short term that's quite positive, but we run into this 61.8% fib up here at 51.75, ties in nicely with the 100-day moving average. So that is also going to be a big barrier, and that's only 75 pips above this breakout. This 5100 area. So there's a lot of obstacles. Okay, so I think we've got to end here. It's 11:47. I think that pretty much marks the end of the webinar, but if there's anything else you'd like to ask me, fire it quickly at me and I'll do that before I get told to stop. Or if you want to contact me through the website, I'm always happy to answer questions, or Twitter as well, which, just to remind you, my Twitter account is worth following me on there. I tend to have phases where I tweet like crazy, give away a load of my levels for free, and I also post a load of free reports on my website, so worth having a look. Thanks very much indeed. Hope that was some help.